Silver today was at 30, last night was at $35 an ounce in spot in Shanghai. So there is arbitrage around the globe, but not as significant as it was a few weeks ago, because it's becoming too difficult to get it there. So I think that arbitrage, which would necessitate some form of expediency in getting the metal sent this way, when you're talking 8 weeks delay, now that these contracts are being stopped, I think that this is something that is going to start to perhaps put great strain on the physical market, perhaps could put a run on the LBMA and really start to shift price setting and global awareness to other exchanges, in particular Shanghai, Dubai, Moscow.
In today's news recap, gold slightly up after hitting record high overnight. Gold prices are up a bit in midday U.S. trading Thursday after overnight hitting another record high. Silver futures are modestly down. The precious metals bulls got through some central bank decisions this week, relatively unscathed, which gives them fresh confidence. April gold was last up $5 at $3,466. May silver prices were last down 21 cents at $33.99. The marketplace has digested the FOMC meeting that ended Wednesday afternoon with no change in U.S. interest rates. However, the Fed did slow down its runoff of its securities holdings, which is a slightly dovish lean. Barron's reported Fed Chair Jay Powell did a superb job of threading the needle. He said the U.S. economy is still solid, but added inflation is creeping up a bit, and there are heightened economic uncertainties. At present, the U.S. stock indexes saw their biggest FOMC day gains since the middle of last year. And Powell also managed to not draw the ire of President Trump, at least not yet. Also, the Bank of England and Sweden's Riksbank left their monetary policies unchanged today as expected. The key outside markets today see the U.S. dollar index higher. NYMEX crude oil futures prices are higher and trading around $68.25 a barrel. The yield on the benchmark 10-year U.S. Treasury note is presently around 4.2%. Technically, April gold futures bulls have the strong overall near-term technical advantage. Bulls' next upside price objective is to produce a close above solid resistance at $3,100. Bears' next near-term downside price objective is pushing futures prices below solid technical support at $2,900. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
No longer purchase forward contracts. You can't purchase futures contracts from New York on the LBMA. And so it's drying up the liquidity in London, where they would use, a lot of the banks would hedge their positions in London with forward contracts, derivatives, paper. Remember, in London right now, there's 200 roughly, last week, I don't know, it's probably a little less now, but 279 million ounces of gold in London. Only 36 of that is available for delivery. The rest belongs to ETFs in the Bank of England. And that's standing behind 380 million ounces in outstanding spot contracts, 11 times nearly the number of contracts issued versus the amount of gold issued. And in silver, it's very similar. Roughly 270 million ounces of silver is all that's available of the 800 million. Now it's under 800 million, like 770, 780, because we saw 85 to 90 million ounces. That's what COMEX is on track for, to be delivered for March, of silver come into COMEX, almost all of it coming from the LBMA. And so and when you talk about 290 million ounces and there's available, yet they're trading 2.9 billion ounces of silver, again, 10 times the number of contracts standing behind the or the metal standing behind those contracts, 10 times the number of contracts. To me, what it really speaks of is the lack of trust in the LBMA system, that no one trusts that they'll be able to deliver anymore. And they're trying to tell us that it's a logistics thing. It's a lack of trucks and a lack of manpower. I think they're realizing that the exchanges are being bled dry. And maybe now what we see is Colmex trying to distance themselves from the LBMA. In the last 3 months, 128.5 million ounces of silver have been withdrawn from London. And so you're talking almost 50% of the float gone in the last 3 months in silver. So between the amount of silver and gold delivered, not to mention all of the others that are standing for delivery, but they're being told it's 8 weeks. It seems like they're turning up the heat. And maybe, just maybe, that rumor of Trump trying to stick it to the Bank of England is really true after all, because this is a very provocative move. And I think, it really does speak of the LBMA losing confidence globally in its ability to deliver. And this is the beginning. So I guess we'll see what the real reason is. Much like most of the things we've seen lately on the LBMA and COMEX, we can assume and surmise what the real agenda is. Mainstream would tell you that's not the case. I don't believe it. I actually feel that we are witnessing a shift from this paper market that all of us thought would never be broken into other hubs like Shanghai, like Moscow, like Dubai. These are cash and carry exchanges where the price setting is far more realistic, instead of a futures market where it's 90% paper and 10% physical, and no one ever stood for delivery. And you and I have been talking about this, and the logarithmic decay, little by little by little by little, and then bang. Are we at that point? Well, it sure feels that way when almost half of the available silver has been drained. And now they're saying it's logistics. We can't really get it over to you as fast as we would like. Demand for physical gold and silver is rising. And this is a move away from the Western markets. It's a big deal. We'll see how big it is. But yeah, I think this is something people really need to pay attention to, on top of the fact that it just continues to move higher. It seems almost every day now.
In today's news recap, gold hits another record as tensions flare over Gaza, Trump tariffs. Gold hit another record high above $3,000 on Tuesday, with investors seeking the metal as a haven from risk as conflict flared in the Middle East, and U.S. President Donald Trump pressed on with tariff plans. Spot gold hit a peak of $3,028.24 in early trade, and by 0927 was up 0.7% at $3,023.30 an ounce. Prices climbed above $3,000 for the first time on March 14th. U.S. gold futures gained 0.9% to $3,032. There is a perfect storm of gold supporting factors, said Ole Hansen, head of commodity strategy at Saxo Bank. The latest focus is the Middle East concerns that come on top of economic concerns about the direction of the U.S. Bullion, which is considered a hedge against geopolitical and economic instability, has gained more than 14% year to date and has struck record highs 14 times this year. Elsewhere, Donald Trump has floated plans for a series of U.S. tariffs, including a flat 25% duty on steel and aluminum, which came into effect in February, as well as reciprocal and sectoral tariffs that he said will be imposed on April 2nd. Spotlight was also on the U.S. Federal Reserve and other central bank meetings this week. The Fed has held interest rates steady so far this year after executing 3 rate cuts in 2024, but the market expects easing to resume in June. You have got the FOMC in the U.S. amid quite a chaotic tariff policy backdrop that could send gold potentially even higher if they have a somewhat dovish stance on rates, said Nitesh Shah, commodities strategist at WisdomTree. ANZ raised its 3-month gold price forecast to $3,100 and its 6-month forecast to $3,200, while UBS set a price target of $3,200 $200 for this year. Silver gained 0.6% to $34.03 an ounce. Platinum added 0.6% to $1,005.70. And palladium climbed 1.4% to $180.50, $977.96. Now we'll show you the best clips of the latest interview, but first hit the like button, smash the subscribe button, and check the pinned comment because we're offering an exclusive discount on NordVPN, an essential tool for gold and silver stackers who value privacy and security. Make sure you safeguard your online activity and protect yourself from prying eyes.
Is this the beginning of that? Well, it sure looks like it could be. But the United States is now prioritizing delivery over paper, which is something wholly, completely different. Almost all the gold that has come over the 25 million ounces or so, almost all of it has already been delivered. So if this delivery continues, you'll see strains on COMEX as well. All I can tell you is that whatever is happening in London, it's the beginning of the possibility of an existential event for some of these banks that are massively short if they get copious amounts of delivery requests, 10 times the amount, 11 times the amount of paper versus gold. That's a situation I certainly wouldn't want to be involved in if I was a board member of one of these commercial banks. Not a good thing. So yeah, and a lot of the banks who would hedge their positions would do so with unallocated contracts in London. So, you take these massive short positions and then try to hedge it with unallocated positions in London. That's not a good thing. It's going to, in my mind, start to really emphasize physical markets versus futures markets. And that's something that none of us would have ever happened. Now, I guess we'll find out. But it's not just the United States. I mean, we've seen in India, in January and February, 44 million ounces of silver delivered to India on top of all the silver they've been buying over the last 4 years. So, we're seeing China buy massive amounts of gold as well. And that's been well documented. China has purchased, what have they purchased? Let's see, I think I have that number. Central banks have purchased almost 1,200 tons in 2024 alone. So I don't have the exact numbers that China has purchased, but it's an awful lot. And look, the bottom line is that physical demand, de-dollarization, alternative exchanges, these things are all happening in real time and all at the expense of the LBMA. And it appears as though, I mean, if you take a step back and you look at it, they throw out the idea of tariffs, which really don't seem what it is to me, and which allowed for all of these exchanges for physical with fungible COMEX contracts into London, and the metal was flowing. And then I think they're starting to realize that this is deeper. So then they come out and say, well, it's not a T+1 anymore, it's T+8 weeks. This is a big deal. And it's a big deal because the banks that have been suppressing the price forever may just have lost the ability to do so easily anymore because they're not going to be able to offset these positions in London with massive unallocated positions when you have all these entities standing for delivery. People's Bank of China has added 600 tons of gold in 2024 that we know of, probably a whole lot more, not to mention what they purchased. But this heavily unallocated paper gold to physical ratio market is breaking. And when you realize HSBC, Scotiabank, JP Morgan, they depend on these derivatives and these unallocated gold to hedge their positions. They're not going to be able to take these massive naked positions anymore, these positions that have allowed them unabated to manipulate the market, because as I've surmised for a long time, there are entities starting with the BRICS and now the United States that are getting wise, I think, to just how important physical is in a game that's rigged. When you see Jeffrey Gundlach come out, the bond king, saying, $4,000 gold is easy and in the cards, you're beginning to see a lot of big name people understand exactly what's happening. And, $3,000 gold, if we see these trends continue, will be a distant memory. And I don't really talk that way.
What's your take on Salente's new outlook? Do you think $3,000 gold is realistic this month, or are there more hurdles ahead? Will central banks continue to gobble up all the gold? It's funny that Gerald Celente has shifted his forecast after being bearish for like 2 weeks, becoming bullish on gold as he sees current market conditions driving prices higher. Share your thoughts and price predictions in the comments. Let's see how this plays out in the coming weeks. Now, watch this video right here because it's a perfect fit for you, and I'll see you on the other side.